Hi guys, just coming up to midday here in London. We'll have a quick look over some of the charts. Start off with the pound. For me, as long as we stay above this trend line, I would say it's an opportunity to still be bullish. I think ultimately we do need to climb above 125 to really see the buyers come back into this market. Reason being, if we just have a look at this whole area, going back to some of the highs from the 27th, it's a pretty important zone. So right now, it's probably wait and see. But above 125, then I'd be looking for the longs to come in. Overall target, I'm looking for 127 for this market, for a point where that then tops out. However, if we don't hold up here, we could see some further dollar strength come in, and I'd be looking for something like that. And it's same for the euro, really, in that we're testing obviously key levels of support at the moment, and unless they go, you've got to be favouring that this market can potentially continue to push higher. Looking at the way it's traded recently, it's had good areas of support that have turned to resistance and vice versa. So if you weren't in a trade now, I don't think there's much harm in just being patient, waiting for a break out of this recent range for the long or a break below for the short. Quite a few people talking about this trend line near the lows, which you've got to have on, haven't you? It's respected well today, buyers come in, so yeah, if it breaks below there, then a quick move lower I think is on the cards. And technically speaking, looking down to the lows from the 3rd and the 6th, 108 handle on the futures, and then even the low of the year. Bringing us on to the S&P, and as you know, you're probably bored of me saying it, but the trend channel, I'll just bring this on and get that roughly drawn. It held again yesterday, and as long as it does, for me it is a buy. You can have a bearish bias, fine, sell below there. Obviously resistance levels above where we're trading didn't quite get reached. The 28th of Feb low was also the low from the 3rd of October. That's your mini range, isn't it? And for me, I'd be happily long right now, and as long as we stay above there. What's to stop us hitting that next target up there? And if that goes from a horizontal resistance level, 29.50, not off the cards. However, of course, if we do break below, then the market could move quite quickly towards 26 and 27, 100 handle. Got some jobs numbers today out of the US, which last couple of weeks haven't really moved things too much. It feels like we're sort of over the worst, and it's a case of just waiting to see whether we're going to have a second wave or not of this virus. Gold, a bit annoyingly for me, I had buy orders waiting down at 17.20, just didn't come in, and we're holding nicely, we're pushing on, and there was a trend line yesterday which I was happy to buy on late last night, and again that didn't come down. But you've got to stay long as it's above there. We're trying as we go now to get above the high from the 9th, and it does get have a feeling here that we can push on, especially if you see the euro pick up, the dollar gets weak, stocks push on a dovish Fed and whatnot. Gold's going to like that and can continue to push higher as well.